If everyone says that ICT concepts are really the best trading strategy, then why do so many people still fail with ICT concepts? Well, it's really the reason that people fail with supply and demand, support and resistance, order flow, and really any other strategy completely under the sun. And that's exactly what we're going to go over within this video. And a lot of you are going to click off this video right now because one, you either want some unrealistic 95% win rate strategy that's apparently going to change everything for you, or you're going to play the victim card and not want to hear the actual truth of why you're unprofitable. So if you can let your ego take a little bit of a hit and just be completely honest with yourself on why you are failing at trading, it's going to help you get to your goal, which is turning profitable. So first off, everyone who's an ICT trader, regardless of if you trade my model or a different model, we look at a lot of different things. Now, the main thing with ICT is typically PD arrays, right? This is what we're paying attention to most of the time. So we're going to have our fair value gaps. We're going to have our order blocks. We're going to have our breakers. We're going to have literally everything under the sun, our fib retracements. We're going to have OTE, liquidity, all of these things, okay? Now, what majority of you are doing is just trying to learn and master every single ICT concept. And yes, that's something you should do, but really what that ends up doing is just clouding your judgment completely. And every single gap, every single order block, every single breaker, every single point of liquidity, you're paying way too much attention to. Now, really what's going to hold more importance over any of these is pairing some in an entry model with time, okay? Time and price is the most important thing that you need to do to become a profitable ICT trader, okay? I know tons of ICT traders who are profitable and tons who aren't, just like a ton of supply and demand traders who aren't, just like a ton of support and resistance traders and indicator traders who aren't. And that's likely due to time and price not being incorporated within their strategies. Before I dive into how to actually trade time and price correctly with ICT concepts to be a profitable trader, if you are currently struggling or have bad risk management and psychology, I've developed a complete and thorough course on exactly how to change those bad habits and really dive into why you specifically are unprofitable and break down really any possible way it can be, and then how to actually fix that and master the PO3 strategy to turn profitable. Now, I've released that for only $17, but with that comes a completely free implementation call with a truly profitable trader with the PO3 strategy, okay? And he's going to talk with you and break down exactly why you specifically are unprofitable. All of us are wired differently, so sometimes we need a second opinion to help us be honest with ourselves and actually fix our mistakes. So if you do want to go ahead and claim that and get your call, then just click the first link down below. Okay, so let's look at how we compare timing and price. Now, you guys have probably seen this little indicator right on the side of my screen. That is basically a high time frame candle beside a lower time frame. And this is very important to help us determine how to trade time and price correctly. So we're just going to draw out exactly what I'm talking about. Now, this concept is called open low high close or open high low close. Now, essentially, this is how pretty much all candlesticks move, okay? This is a fractal concept. Open high low close and the PO3 are fractal, meaning they can work from the 5-second chart all the way up to the yearly candle, okay? So generally, majority of candles are going to move like this, okay? They will first open, okay? If it's going to be a bullish candle, which you determine through your bias, we open, then we will make a bottom wick before continuing higher to put in the top of the candle. Now, once we put in the high, then we will accumulate and end up retracing a bit to make our top wick up there. Okay, so this is literally just the anatomy of how a candlestick moves. Now, opposite goes for a bearish candle, okay? This is step 1 where we open. This is step 2, making your high. This is step 3, making your low. And this is step 4, which is closing, okay? Now that we understand that, we can go ahead and look at, well, how do we actually trade this? How do we pair this with time and price? So Basically, the one I pay attention to most is the 4-hour candle. Now, we can dive into time frame alignment as well. The one you want to pay most attention to is going to be the 4-hour candle paired with 15-minute PD arrays entry on the 1 to the 5 minute. So that's what we're going to focus on in this video. But you can also trade this with, say, the daily time frame, looking for hourly PD arrays and entries on either the hourly or lower. But typically what I like to stick to is the 4-hour. Okay, so basically every day, the one I like to trade is at 10 a.m. Eastern. So let's just say this candle opens, boom, right at 10 a.m. Eastern. That's when the new 4-hour candle opens. And let's say from our bias, we've gathered that it is going to be a bearish 4-hour candle. Okay, so this is the 4-hour time frame. And right beside here, we're going to have the 1 to the 5 minute time frame. Okay, we will begin to accumulate. We open and accumulate, which is the first part of that power of 3. Now, once we have generated enough liquidity, and what I mean by this is usually we want to consolidate for at least 5 to 15 minutes so that we can form a new 15-minute fair value gap just above so that we can have something to manipulate into before continuing lower. So step 1, we open and accumulate. Step 2, once we've done that for 15 minutes, form a gap, we will manipulate, grabbing liquidity from that gap, sweeping out the accumulation highs, while at the same time putting in that top wick of the 4-hour candle. Okay? Once we do that, we're not just going to enter once it looks like it makes a top wick. We're going to be patient. We're going to wait for an entry confirmation. Generally, some form of CISD. Usually, we can take a standard CISD or we can take a fair value gap inversion. Okay, now usually you want to enter there. Generally, if you can enter kind of around where that opening price is, sometimes if you can get an entry above the opening price, great. If you want to wait for more confirmation, that's okay too. But basically, you're going to go short there. And what are you actually doing? Okay, it looks like you're just trading a low time frame PO3. But if you were to zoom out on the 4-hour time frame, you're just trading the bearish movement of one candlestick, which is why pairing time and price is so simple, okay? Also, if you notice, 10 a.m. Eastern, that's within a macro, right? Usually we're going to have a move, fairly soon, but volume is already starting to build. We're starting to get larger moves. And also, we can manipulate in that first 10 minutes, right? If we started to accumulate before 10 a.m. and at 10 a.m., we can always manipulate into a gap that's already been formed within that macro and then get a ton of super strong delivery. So pairing time with price is just so important. Now, I know this might sound a little confusing just from the drawings, but let's go ahead and look at a pretty primed example on the charts. So I'm not going to go over completely my bias. If you do want to check out my bias, just go to my YouTube. It's one of my most recent videos. So you can go there, master your bias, and then if you want to, come back and test this entry model with me. So right here, we can see, what time is it? Oh, 30 minutes after market open. That's 10 a.m. Eastern, right? So we'll mark that out right there. I have a high time frame candle indicator on, and we can see instantly price begins to accumulate. And within this example, we're assuming we're bullish because of what we gathered from our bias. So boom, we are accumulating, right? We've remained within this range, tight range of candlesticks, not really breaking up or down. Now, what do we see here? Okay, we've ranged for over 15 minutes here. So let's drop onto the 15 minute and see if we have a gap. Okay, we do have a gap. Obviously, you can see we do end up tapping into that. Let's go ahead and mark out that 15-minute gap. That's where we're going to wait for a manipulation into. A manipulation is likely going to cause that low of the 4-hour to be put in. Okay? So we're pairing price with timing of a candlestick open. We can then see price come down and manipulate into that gap and instantly see a reaction back to the upside. So where are we going to enter, right? We won't just enter the second that happens. We're going to wait for an inversion, okay? That is when a fair value gap gets closed above by a candle body, if you do not know. So right here, We have that fair value gap close. Okay, candle body closer above that gap. So we have everything we need to enter. This is really where you can expect high time frame distribution. Now, usually with PO3 trades, if I can get, a 2R and set some runners, generally that's what I look for. But with that being said, I don't limit myself, and I also set targets off of relevant points of liquidity and relevant PD arrays. Okay, so as you can see, I used a lot of ICT concepts here, right? I used a fair value gap, I used the power of 3, I used an inversion, and I used liquidity for my targets. But what's important here is I paired it with time. Okay, if I'm just using that shit randomly, then you could be stuck in some of this shit, right? Another common thing that I see, and we're not going to take a look at it at an example today, but I've seen so many times where people get really anxious to enter off of the first retracement after the market's absolutely ripping, and we end up consolidating for an hour because they failed to see that, oh, since market open, we ripped 600 points. Maybe I need to let the market settle down and accumulate for a bit longer, gather more liquidity, and actually wait for the next macro and wait for an hourly fair value gap, okay? That's also pairing time with price, okay? You're being patient. You're letting the market breathe and do what it needs to do so it can gather more liquidity to actually make a big move. But as you can see, this is not like extremely significant, super bullish day. This is kind of exactly what we want to see when pairing time with price. Literally the second all of my students join, I make them start pairing time with price. As you can see, Rob literally passed 8 Apex evals, 250Ks. That's a shitload of funding by pairing time with price. Then Jaden, I don't even think we've been working together for 2 months yet, and he's already passed his 2 very first funded accounts thanks to the PO3 and a time-based model. Also, not to mention the freedom a time-based model gives you, okay? I'm on the charts for maybe an hour, hour and a half tops every single day, and then I can go do whatever I want. I don't have to monitor the charts all day to try and find the best setup of the day or, oh, volume's finally getting good. I know when the volume's going to be good. I'm on the market every single time at the same exact time, okay? So it really helps you simplify your process, and that's also a big reason why this helps keep people profitable, because they have a really easy system to stick to, okay? It's much more mechanical than just trading a full blur of random ICT concepts. Like, oh, I see a unicorn setup here, and then we got a 5-minute inversion, and then a fair value gap tap. Like, no, we know when the market's actually going to move, okay? Pairing ICT concepts without price is practically useless, and most strategies doing that are also useless in that manner. But again, I feel blessed that I'm free to do whatever I want basically every single day just by doing an hour of chart work. And if you guys are interested in that kind of freedom, I'm looking for 4 more very, very serious and dedicated traders to hop in the mentorship. We've already turned away 60 applicants this month alone. So if you are very serious about turning profitable with the PO3 and making trading really your life, then you can book your interview call at the second link below. So hopefully you guys got a lot of value out of this video. I hope that it gave you a lot of insight of why maybe you're not profitable or why you can't push past that next step. So I'm going to leave you guys with that. Let me know in the comments what you guys want to see in the next coming YouTube videos. I'll see you guys later.